It's Friday the 11th, I'm FX Plu and this is CurrencyTransfer.com's market update. The main headlines today are sterling remains under pressure as the MPC delays rate hikes, the US inflation data affects their rate hike expectations, and the euro is back above pivotal levels as the dollar corrects. So up until a few weeks ago, the MPC was expected to raise rates at yesterday's meeting to provide further support in the fight to lower inflation. Yesterday there was no rate hike, and Carney announced that they had also cut their growth forecast, which casts doubt on the timing of any future rate hikes as well. The bank is choosing to wait out this period of economic weakness, which Carney prefers to blame on the unseasonal weather towards the end of Q1, remaining very tight-lipped and neutral about the handling of Brexit. So the current economic woes of the UK is all to do with the weather and nothing to do with Brexit. Well done, Mark. Sterling took all of this into stride though, and cable closed around 135.20 yesterday, up from the low of 134.60. Sterling euro slid a little towards recent lows, closing around 113.45. And that largely is driven by the euro-dollar cross and indeed the dollar correction, because in the US the CPI inflation data came out marginally lower than expected at 2.1% for April. Forecast was for 2.2%, so a near miss. But that was enough to affect market sentiment towards shelving any idea that the Fed would be in for maybe 4 rate hikes this year. So market sentiment over there is very much now focused on the 3 rate hikes this year that is already largely priced in. The dollar index corrected a little down to 92.50, 92.55 area after the inflation data. And it recovered a little, I think closing at 92.70 odd, but the next resistance level, which is around 93.50, currently looks a long way off. The euro, single currency, that's had a funny old week. Euro dollar broke through the strong support at 118.80 and fell down to a fresh low of the year at 118.22, you remember. But the market appears reluctant to sell more at these levels. Yesterday on the back of the US inflation data, it did rally a little back through the support level and indeed touching a high of 119.47, closing the day around 119.15. So it's too early to call the bottom on the move currently, as the euro does remain very reactive, and the dollar is predominantly driven by events outside of the US at the moment. So we could very easily see a dollar resurgence and another test to the year low. One to watch for sure. If you've got any questions, pop them in the comments below. Otherwise, I wish you a wonderful weekend and I'll see you next week.